Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the short week beginning Tuesday, September 6th, 2016, ending Friday the 9th. Hope you're having a good trading week. Actually, it hasn't been that exciting. Volume's been low, market's been flat. We'll talk about that in a minute, but we are coming out of that period of the year, summer doldrums, as they call them. Usually ends somewhere around Labor Day. Volume starts to start picking up. Oops, sorry about that. Let's keep going. So we'll talk about all that, but here's the ES front month futures contract. This is the daily chart of the broad market in the proper futures format. And as you can see now, we're basically talking about since just after 4th of July, so 2 months of being in an impossibly narrow range. Let's slide back. The year before we had some pretty narrow activity. It was pretty bad, actually. 80 pips of range from basically February through July, August, until things really tanked in August last year. Right, so that was bad. Then we got the dip and the double bottom and all the excitement we had in August and September, October, November. Great period last year, starting in the middle of August, right after options expiration. And anyways, double bottom there, and then we bounced and then topped out in November. And it was still, look at this, even in the boring action, 100 points of range down and back up in November. I mean, that's good stuff, right? Then the new year starts December. We start to roll over. January, another couple 100-point dip, double bottom. February and March, huge move up. 13 sell signal to top us out. Short term there at the beginning of April. And that gave us a 2-month when we got that exhaustion sideways for 2 months, right? And then finally we tried the highs in May. And then we did get a little dip. June was fun. Down and back for a few days. Got some action there. I would say there's a good 3-week window. It's still summer in July, but it was fine. I mean, no problem. And then it hit. And then here we are in like a 50-point range on the ES now for 8 weeks. And the volume has been poor, and we'll look at that in a minute, and it is what it is. So, anyways, let's see what else we can look at. Let's go through the indices. So, QM, this is oil, gained $1.30. Not really any place special here on oil at this point in time. We've got gold up 13.6, and that's a little bounce there, but still not very interesting. We've got the S&P up 9. We've got the NDX up 14. Now, the thing you got to remember, though, is when we look at these indices, first of all, they're still, even up 9 on the gap today, they're still so flat. And by the way, the S&P is trying to put in a 13 sell signal somehow in this flat action. It's going to be the most useless sell signal on the planet if we get it. NDX, we had a 13 sell signal back a month ago. We had the risk line for that. That's the pink line. We couldn't get through. We've tried it twice now. Almost tried it again on the gap up. Somebody was asking if that broke the line today when we gapped up. No, we haven't gone anywhere. Even the gap up today didn't add up to anything meaningful on the charts. Here's down 1 on the SOX. That's a blip. Biotech's down 6, also a blip. Nobody was around for Friday for last day before Labor Day weekend. It was horrible. The VIX was down $1.50 though. That's scary. 1190. And that really is essentially close to a sell signal in the market every time we get down here. By the way, that gives us a seeker 12. One more candle down, we get a seeker 13 buy signal on the VIX. Now, why is that important? The last time we had that was back in April. And you'll notice how specifically, even though it took a while, we used the risk line. It's the pink line. We never got below it. And then we curled back up, and then we shot up in June, and that was what gave us the volatility. And so if you go look at September, the S&P, that was in April when the market got the 13 sell signal, and then we finally got the dip in June. So, again, it may take a while, but we may get a signal here that'll be very meaningful between the VIX being again under 12 and getting a buy signal there. The trend could give us a big, well, not a big number, a small number, but a big signal soon, because we're going to drop a couple of really big numbers. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. So by Thursday of this week, we're going to drop those 2 high prints up at 1.75 and 1.5 off the 10-day moving average. And when we do that, that should make everything fairly interesting. We may get a moving average of 0.85. That would be a sell signal there as well. So the NDX still operating under a sell signal, but overall the markets are so flat. Here's the key: is volume going to come back? So here's Nasdaq volume again, closing low at 1.3. Look at how bad it was in August compared to July, compared to June, earlier in the year. Look at all you really need to do is look at the blue line. It's the 10-day moving average. Obviously this is the lowest it's been all year, and this is typical. We were hoping for a pickup after options expiration in August because we got it last year. Didn't happen this year, but look how bad the volume is. But even if you go back to last year and look, yeah, we had the big spike in August in volume because of the plunge. But just look where the volume number ends up by the time you get into September. Somewhere shortly after the start of September, look at that blue line move up on its own. Actually got back to a 10-day moving average, almost 2 billion shares. So, we can head back to there, but sitting down here at 1.4 as a 10-day moving average is about as miserable as it gets. Nobody's trading. Advanced decline ratio on Friday, plus 1,087. It's pretty flat on Thursday, plus 1836 on the New York on Friday. Google gained $5.47. Nothing there to talk about. Apple up $1. Nothing there to talk about. Amazon $1.82. By the way, oh no, we're in projection mode already. So that's 12. Amazon's about to hit a new 13 sell signal. One more closing high, one more day up, and that'll be it. Netflix dead flat even. How often does that happen? By the way, let's take a look at Tesla, another one we watch, because it had a big sell-off the last couple of days. Back to the red static trend line. All right, so let's look at the intra-week action. So what we're going to do here is we're going to change this to a 10-minute per candle chart, and this will show us Monday through Friday of this week. So Monday, a very small gap up, and then we shoved higher and then flat the rest of the day. Tuesday, a flat opening, one dip, flat, another dip, and back up. Wednesday, gapped down, did not fill the gap, pushed lower and back to close even. And basically at that point, we were even for the week. Hadn't done anything. Thursday, a flat opening, shoved lower, bounced back up over lunch and dead flat. And then Friday, when nobody's around, but we had trade balance and the unemployment rate number come out, we get a gap up, and the first 2 hours are very, very dead, right? And then a little drift lower. Same thing here on the NASDAQ side. So the gap that we left is the one from Thursday's close to Friday. Everything else filled for the week. And that's it, though. The main thing is we haven't gone anywhere. You can sit here and talk about gaps up and the market's strong. All you need to do, all you really need to look at, this is what's so important in life. Always stay focused on the big picture. Here is the big picture. This is the broad market. That is as flat as it gets for 2 months. There's not, be very fortunate that we've pulled. I just posted all of our results for August. Again, gains in Forex, even though we were half size. Nice month in futures, even though most of it was in the first 2 weeks. Nice month in stocks once again. Nothing to complain about, but not as many trades, and certainly I don't blame anybody for trading less size with volume, especially these last couple of weeks, been as low as it is. All right, so we start off the last part of the year. This is where things tend to get exciting. The next 8 months, minus the weeks around Christmas, are usually the best trading months of the year. And here we go. On Monday, the 4th, we are closed for Labor Day. On Tuesday, the 5th, no economic numbers out. On Wednesday, the 6th, is that right? Am I doing that right? We are correct, right? Wednesday, the 6th. No, sorry. Monday's the 5th. Tuesday's the 6th. ISM services at 10 a.m. That's 30 minutes in. Wednesday, MBA mortgage index, JOLTS job openings, crude oil inventories, Fed's beige book. Thursday, initial and continuing jobless claims, natty gas, crude oil inventory, and the consumer credit. Friday, wholesale inventories. The other thing to keep in mind, by the way, okay, is that because we have this holiday, but we've already had a Friday in September, options expiration is already going to be the week after this one, and it's a triple expiration. Okay, so let's remember that that usually will lead to some excitement that next week, except for Friday the 16th, which is going to be dead. But so we should start to see a pickup here. Obviously, people are on vacation for the weekend. Tuesday doesn't have to be suddenly everything's back to normal. That's not how this works. Matter of fact, they're still coming back from barbecues and everything. Last barbecues of the year, and I hope everybody down in Florida and North Carolina and South Carolina is safe. Atlanta from the hurricane this weekend. But I'm not expecting miracles on Tuesday, but hopefully we will just generally start to see volume pick back up. That's what we want to see. We don't have any major economic numbers to dodge here for the week. We're just going to focus on doing what we do and seeing what the market gives us. Charts as usual brought to you by eSignal 12. If you've not yet taken a trial of our services, now would be a better time to do so than the last 2 weeks. Have a great trading week. Hope to help you out.